Hello everyone, Sam is here from myforestmagicwave.com. I'm making this a small video to answer a couple of questions that I got yesterday about this pound USD crab pattern, and also there was a question about the entry. So I'm going to explain that because on the email I is in words typing, just not explaining. So here I am. The question was that this was a reversal of the crab pattern. Somebody showed me a chart, but I don't think I have it here. But anyway, regardless, let me show you what is really happening. And oh yeah, I know what happened is that, let me go and take a real chart. Okay, the crab pattern chart that it was sent out to me, it was taken from here. See this high to this low. If you go this low, right, then you can see right here we hit 1.618, and this is the reaction. Okay, so I was asked that, I mean, it was a reversal from here, or we still need to go there. Okay, both possibilities are the possibilities. But what I'm looking at, let me explain it to you. The crab pattern webinar I did maybe a week ago, and I explained that the reason why I don't trade these patterns as a crab pattern, and rather I trade them as in terms of Elliott wave, because of the fact that after finishing the crab pattern, the reaction is only the fourth wave. Okay, and fourth wave is only like 38% of the third wave, which is very shallow, and also it is in three waves, and usually fourth wave also, complex correction, triangles, sort of that. So you really don't want to get caught. At least I don't want to get caught in that. Okay, rather wait for the fourth wave to finish, and then if anything, then you trade the wave 5. So what it is that, let's say if it is wave 1 and 2, and then this whole extension up to 1.618 of this thing is basically is like wave 3 followed by wave 4, and then you go up for wave 5. This is my observation. This is my understanding of the market over the years, and Elliott wave. And remember, I again and again said that these patterns came after the Elliott wave recently, and Elliott wave is the old study, but it was basically done on stock markets and all that. Okay, not forex markets. Forex market is a little bit different in terms of volatility and running and up and down and movements. So you have to, we need to adjust ourselves with these studies, just like any other science that, the world was round for years and years. Now it's not. So, there was a planet, I think Jupiter was a planet for all those years, and now it is not a planet anymore, right? We don't have 9 now, we have 8. So you find new things, and then you adjust yourself. So that's what it is. So basically, I sent out the chart was this, right? Saying that if you pull the fib from here to here, 1.618 goes here, and then again, if you go previous move, and you take that into consideration, and then pull a fib expansion tool, that also comes. See, this is how it is, that you need to see what other numbers are coming together. It is very harmonic. This market is very harmonic, so the numbers are there. You just need to find out. So if I see these two also coming in this in vicinity, this 100% was 170.32, and this is 170.45, 15 pips difference. So now what actually happened here, or happening here, that this starts as like wave 1, 2, and 3, the crab extension. Okay, 1, 2, and 3, then followed by wave 4, and then 5, and 3 is around 1.618 of wave. Actually, this is how it is. We pull the fib from here to here, right? Now, if this is 1, 2, 3 followed by 4 and 5, and crab ends at wave 3. So we have wave 1 and 2 already in place, which is right here. B and C is wave 1 and wave 2. We need wave 3. Now wave 3, as I mentioned so many times, that also has 5 subwaves in it. Usually it goes like the channeling. See, this is how it is. This is wave 1, then you have wave 2 in zigzag fashion. So if you pay attention here, what we have, see, A, B, C, this is a zigzag fashion. That's wave. Let's say this is wave 1, this is wave 2. Now we will need wave 3. Right? Wave 3 will have 5 waves in it. Right? Okay. Now wave 3 will have 5 waves. Okay. So this whole thing is wave 3. And then wave 3 will have 5 waves in it, right? But out of wave 3, you can also have like wave 1 and 2. And this wave 3 can have 5 waves in it as well, just like this whole thing. So if you look closely, what we have is we have wave 1, 2, and then wave 3 unfolding after that in 5 waves, which is wave 1, 2, 3, and now we are doing wave 4, followed by wave 5 will end here, 161.8%, finishing our wave 3 completely. Let me start marking that so you will probably understand what I'm saying or doing. Okay, let's take this one. Okay, leave this thing alone. All right. You see, from here to here, we pull the fib and we got 1.618 crab target here. Okay. Now, how it is going to be opening in 5 waves. So out of the 5 waves, what we're having is first, let me get rid of this. Okay, so this is the target, 1.618. I got all the lines up. See how the price nicely came in this high, expecting this. I think this is the last week high or something as well. Anyway, so out of that, what we have here is wave 1, and this is wave 2. Okay. Now we need wave 3 at the whoops. Okay. Give me a minute. I need a charger. Okay, I'm back. So this is wave 1, 2, and now we need wave 3 up to, yeah, right here, 1.618. We will have wave 3 somewhere here. Okay. Now wave 3 can have 5 waves in it, right? And now you can see very clearly that we have Roman counts, wave 1. This is wave 2. Oops, this is not Roman. This is wave 3. Right now we're posting wave 4. Poke a little bit into the channel, right? I'll show you that as well. If you pay attention here, how it goes. See wave 3, then wave 4. How wave 4 goes? Wave 4 comes here, but wave 4 usually poke a little bit into the channel. If you make the channel 1, 3, 2, 4 comes a little bit inside, poke it, then go back inside, and then wave 5 starts. So let's see if we can do that right here. So we have wave 1, wave 2. Where did this come from? Oh, instead of Roman I should put that 3. So this is wave, dummy. Okay, right. This is wave 3, right? And this is wave 4. Now you see, so I place this here, remove that. Okay, now you see this. So I'm gonna make a channel just like I just showed you, and then take a duplicate and place it on wave 1. So you have wave 4 poking a little bit in there, and then let's see if it becomes back inside again, and then shoot for the wave 5 right here, around here somewhere, maybe above the breaking the channel a little bit to the upside. Oops. Okay, so this is how it is. So now we're gonna have is a wave 1, and then wave 1, 2, 3, 4, 5. That would be wave 3 finishing. So 1, 2, and then wave 3 will be here, right? Then we will follow wave 4 will be 38%. Now, if this is wave 1, 2, 3, 4, let's measure this. How much is this one right now? Wave 4. Oh, I lost my fib. So let me get it back. Now I have it. See, magic. So it is so far 50%. Okay, so that's normal. 38% or 50%, very close. Okay, usually it's 38%, ideally, theoretically, but practically, wave 4 can go to 50, 61%, as long as it is above wave 1. So see, this wave 1 is here, and if it is not coming into the territory of wave 1, then it is wave 4, which is we are pulling back right now. So let's see if we go back over there. So this is what it is happening. Okay, so so basically this is here at my, where that crap go, right? So this will end. See, this is wave 1, 2, 3, 4, and now this wave 5 will go. So instead of, the calculation is there, but instead of right here, oh man, we'll probably be finishing this right here, but we will be finishing in that vicinity, in that area. Okay, so I hope you understand it, the whole thing, that this is what I'm looking at it, right or wrong, but what I have learned theoretically, practically, with experience, this is what happens. Crab, all of the harmonic patterns, I always look both ways. And my weight, if I weigh both studies, usually I go with Elliott wave. Okay, they are more correct. So now we got 1, 2, then 1, 2, 3, 4. We will probably follow with wave 5 to the upside around this area. Then we will have wave 3 finished, 1, 2, 3, and then we need probably wave 4 to the downside, back to the last 4 in this neighborhood. So we go up there, we come down here. Then we will be going for the wave 5 to the upside. So this is how so far it is. But maybe the whole thing is probably only wave C of a correction, some kind. So if it's just a correction, then we will probably start coming down as an impulse wave to the downside, direction change, trend change. So when that happens, or we come to that, then we will study that, that far, doing the predictions that far out in the future is not me. Okay, I can see through it, but it's not a solid thing. Anything can happen. Anything in the world, economy or fundamentals can change the whole scenario. So why bother? Just take immediate what's happening, and then step by step we take it from there. So far this is what it is. This is what my crab pattern is going to be finishing here, and then we will drop from here to here. even that will come like maybe if some kind of flat correction. If it is a flat correction, you want to trade the C leg, not the A leg. A could, maybe it's not A, maybe something else. But once you see this A and then B is in place and then start dropping for the wave C again, no, you know that is probably a correction and it's a wave C probably, then you know at least it will be equal to wave A, so you can trade that. Or maybe if it is a triangle, then it will come short a little bit, and then worst come to worst, you will get knocked out on break even. So what? You always try, and it's very hard to trade triangles anyway on a wave 4, but you can try and be safe, stay on the safe side, and try. If you get knocked out, try to get knocked out, knocked out on break even, and that's about it. So crab pattern is my crab pattern is going to be finishing here, and then we will have a reaction. So far we are still intact as a crab pattern, and this is also the trend line connecting these 2 points, wave 1 and at the end of wave 2 here, small wave 2. Okay, so if you have this trend line, you see this price came and poke into it. You have two things here. You have 100% high here, which is strong area to bounce. Very strong area, 68.22, right? And that number, and also this trend line, and also Elliott wave, fourth wave, and this high is going to stop it. Okay, so by law, the price should not be coming into the territory of wave 1, which is this. For this fourth wave, the wave 1 and 2 are these. This is 1, this is 2, not this one. This is something else. This is the bigger picture, right? But Roman 1, 2, 3, 4, this is 3 and this is 4 for this 1 and 2. This 3 will be from this 1 and 2 after finishing the 5, Roman 5. Okay, so this is what the answer of that thing. It's not about right or wrong. It's not that I was right or you wrong, or you right or I'm wrong. It is what the theory is, and then this market can prove us all, everybody, are wrong any given time, no matter how hard you do the study. Okay, one news comes in and all the technical goes out of the window. Boom. Okay, so but what we have, the best tool we have is these harmonic patterns, Elliott waves. There's nothing else out there. All right, so we master these tools and we try to get the best out of it. Okay? Understand it, the implementation, and all the nitpicks. And with the experience, you will get the sense that what is cooking really. Okay, so, and that's my intention, is that give you the fundamentals, and then you start learning and going too deep, and then understand these phenomena and watch for yourself, make the counts, and then see for yourself that how it is going, unfolding. When you see these things unfolding like that according to the plan, it feels good. Okay, so this is what the pattern is, crab pattern, but in terms of Elliott wave. This whole thing would be, this is X, this is A, this is going to be, A, and then this is B, C, and D would be here, 1.618, followed by 38% of this whole thing will be, right, so let's say from here, and if we finish around here, okay, if we finish the crab pattern here, then 38% comes again to this number. See how calculated is this? So this is how it is, right? 38% will come back again to this high. So we will go up there, then we will come back here, find support again here as wave 4, and then shoot for the wave 5. Okay. Another one was about the entry, that how far the setup is good. So I just saw something very good this morning. I'm going to point that out to you. Let me see if I can have it. Oh, forget it, man. I go here, and I go. Okay. Can I have it here? Okay, I think I have it here. All right, this is the ideal situation, okay, for the entry. So you see this, this is Euro USD. We dropped yesterday, and then we start, messing around here. We are below the blue line. This, and again, the same sentence. This is a swing changer, not the trend changer, the swing changer. Swing, the price goes the other side, the swing changes, and then it's going to go on the other side. So if it is staying below that, then you look for short, most likely, also with the technicals and analysis. But as it was retracing to the downside anyway, so on a 5-minute chart, you see that it's a blue line, and then it comes around here, and then this is the setup you have. Very clean setup. Okay, this is the momentum bar right here coming out of the wave, and you have all these indicators in line. Now, the question was that how far this setup is still valid. You can see here that after this momentum bar, you have 1, 2, and the third one broke it to the downside. So I would say maximum look for 4 or 5 candle. That's it. Okay. Now after that, if you don't break the momentum candle, either high or the low of that, then the setup is a little shaky. A good setup on a good timing, like U.S. session or after London Open, will not hesitate going in that direction out right after, like this one. Okay, like this one here. Okay, it was a little above the yellow line, but anyway, so if you consider this is let's say first of all this candle. Okay, so this got knocked out, but this one, this very next candle broke it to the downside and gone. Here you can see that this candle, this is a very good solid setup here, right? And let me get a little bigger. Where'd it go? Oh, right here. Okay, so you see this one. So now if you have this, and what is the timing? The timing is very important, right? So this is 1300 in the morning, London, not London, so US session overlap time, right? So it is very good time. So that's what it is. In these times after London Open and until London close or US lunch time, should I say, you have high volume. And when you have a volume, then after this setup, the volume takes over, and then price moves fast, doesn't stay. So after that, you can see that the next couple of candles broke it to the downside. If you place a pending order below or above the momentum bar, you see ideal after all these indicators in line, then it just takes it. Okay. But like this one here, you have a momentum bar, right? You place a pending order here, but it never kicks out. Never kicks in, sorry. And see, it goes up again into the wave even above it. So you remove that order. Then you get another candle, this one, and then you place a pending order here. That will kick in. This is another way you can do it. Right here, you can do the same. See, put a pending order here, it kicks in. Okay. So this is it. Don't wait if it is too long. And then again, Francis, I guess, right? You asked me the question. So make sure this signal line of this indicator stays below for the short and above the water line for long. The setup that you showed me was a long setup, you said, and then the price was below. I mean, actually dipped below this yellow line, or the other side of the wave, and for a long setup, this indicator was below the water line, so that was not the valid setup. You need, well, if it's a little bit like this one, it's fine, but if like something like that, it's a no-no. Okay. Or something like that, for a short setup, if it goes up here, no, I wouldn't bother thinking about that. We're gonna get a setup here. Yeah, this one, if this indicator is a little bit higher, then you have a setup because the price is not above the wave, it's below the yellow and inside the wave, and this signal line is below the water line, below the white line, horizontal white line, right? So if as that is one of the conditions that shows that momentum is still on the downside. As long as this signal line is below the water line, the momentum is to the downside. In the same time, This indicator shows oversold and overbought conditions. So basically, let me explain it to you that let's say for this entry here, right? So clearly this indicator is showing that momentum is still to the downside, yet we are overbought. Got it? So you are overbought, so you cannot be bought again more, right? And the momentum is to the downside. So what are the possibility to go down? A lot. But if you are oversold and also momentum is also to, you see, this is overbought, but the momentum shifts to the upside as well. It's a lot of momentum to the upside. Then it is a little dangerous. Okay, it could continue going up. So ideal situation is that you want the momentum to the downside, the pressure on the downside, yet the other indicator shows the overbought condition, and the opposite, and a long entry. If you want that, the momentum on the upside means the price has a very good chance to keep going up, yet you are oversold in point in those the whole move. The move is going up and up, but you make like a retracement and then you become oversold. The indicator is showing that for that particular time frame you are oversold. Then you have a good chance that pop to the upside because the momentum is still on the upside. If this indicator is to the upside, man, like here, see, if it is upside, then it is traveling to the upside. So right around here, this is oversold condition, yet the momentum is to the upside and the price itself above the wave, giving you this momentum bar. Take it. Simple as that. Okay, so hopefully it helps everyone. I'm gonna send this video not only these two guys but everybody else, so that this is what I'm gonna do. I'll have like a couple of questions here there, and I write it down, and I'm gonna make a video answering all the questions and send out so that everybody can benefit out of it. Okay, so please, if you guys have any question at all, this, that, how this, how that, whatever, just send it in the email and I'll write it down. But don't be in a hurry that it might take a day or two to answer, because I want to collect few questions and then just make one video, because if every video, if every question I'm going to make a video, then my life is over. Okay. So every 4 or 5 questions, 10 questions, I'll make a video and answer those questions. And so this is, I started, there were a couple other questions that I forgot, so please send it again and I'll make a video and send out. Okay, all right, so thanks for watching. Have a great day.